Infosys, let's look at the first numbers that have started pouring as well. That's what we're watching out for. In terms of the consolidated revenue, 38,821 crores is what the revenues come in versus 38,994. So yes, keeping an eye out on that. We also have the profits numbers that have come in on the screen as well. Profits of the company are at 6,106 crores versus 6,212 crores as well. So yes, other than that, what I'm looking at in terms of the press release that I have open in front of me as of now. Okay, let me just go across. And okay, in terms of the total that we're seeing for financial services as well, seems like the numbers seeing a 27% growth on a year-on-year basis as well. Shrishti, do you have some bit more of a numbers that have come in over there as well for Infosys?
Well, yes, Winnie, the key highlight is the guidance that the company has come out with, because for the year FY24, Infosys says that FY24 revenue guidance has been now revised to 1.5 to 2%, while the operating margin guidance has been kept at 20 to 22%. Because earlier, what Infosys said that FY24 guidance will be at 1 to 2.5% of the growth that they were expecting. It was Morgan Stanley that was expecting that the company could tighten the guidance for the revenue growth, and they could actually trim down it a bit from the upper end of that was 2.5% expected earlier, and now the company says that they are expecting a revenue growth of around 1.5 to 2%. Let's go across to Anisha to find out what does this mean for Infosys. Is this cut could have yet again lead to a fall into the stock price of Infosys? Anisha, over to you.
Oh yes. Overall for the Infosys, it looks like an inline set of numbers. I don't see major red flags or green flags as such. If you look at the constant currency number, that's shown a decline of 1%, which is towards the lower end of what the street was expecting, because part of the street was also expecting 1.5% kind of decline. So it's not as bad as the street was fearing as well. The margins have held at around 20.5%. We were working with a number of 20.6%. So there's not a major disappointment there as well. And if I remember it right, the overall profit figure also came in line with expectation. It was around 6,106 crore, 20-30 crores less than what we were expecting, and the dollar revenue at $4,663 million is again in line with expectation. What really stood out was the TCV number. We were expecting that the deal TCV will be between $2 to $2.5 billion. The company has performed better than that. They have reported a deal TCV of $3.2 billion. It's very critical this time around to watch the deal TCV, because remember, there was that big MOU that they had signed of $1.5 billion that got cancelled. So street was worried whether there will be more deal cancellations like that or not. But for now, it looks like that the company has managed to stem that problem, and the deal TCV has come in at $3.2 billion. So an inline number when it comes to the top line, margins as well as bottom line for Infosys. However, the bigger talking point that you were talking about is of course the guidance. I'm not too surprised by the trimming of guidance that has happened, because the upper end of the guidance was expected that it will be trimmed down. That's come down to 2% if I have it right, and the lower end stands at around 1.5%. So they've actually upped the lower end of the guidance from 1% to 1.5% and cut the top end of the guidance. So they have pretty much narrowed it down between 1.5 to 2%, which is bang in line with what street was expecting. So no surprise there. The margin guidance has been held at around 22 to 22%. So that's important to track as well. I'm looking at the individual segments, and I'm a bit worried about the financial services segment, because the constant currency there has declined by 6%, and I think it's the third or fourth consecutive quarter that financial services has been lower for Infosys as well. In terms of the communication vertical, that continues to be a pain point. It's down about 8%. North America has also seen quite a bit of challenge. It's down about 5%. That's a large number, because for these IT companies, a large part of the contribution comes from North America. Overall, if I see the employee number, that stands at 3,22,663. So there's a decline of almost 5 to 6,000 headcount as far as that is concerned. And this is despite attrition coming down to sub 13%. I think if we do have Mayuresh with us, I would like to toss it to him to get a sense as far as Infosys is concerned. While TCS was a decent to a slightly better set, for Infosys it's broadly in line. to a slight miss coming in. The, of course, only green shoot, if you have to look for it, is the deal TCV number, which is coming at $3.2 billion. But other than that, I would call it a pretty much, average or inline set of numbers. I'll toss it back to the studio to get more sense if we do have the experts joining us and pose the questions to them as well.
Anisha, as of now, we do not have an expert joining in with us. But Anisha, before, we just wind it up, or, just could you give us versus TCS versus Infosys a roundup of both these? I know it's a busy day, afternoon coming in right now, but TCS versus Infosys, what should we expect tomorrow in terms of the moves?
Well, I think TCS is likely to open up in the green because no disappointment will be taken in as a good news by the street. Yes, there is a bit of a dip in the deal TCV of TCS, but overall I think that will be taken with a pinch of salt. So the headcount addition, or actually the headcount decline I should call it, is a bit worrisome. But at least the fact that the revenue conversion is happening, the fact that the margin has been held up is something which will go down well with the street. For Infosys as well, I don't see a major disappointment on the stock price tomorrow, given the fact it ended close to the lowest point of the trading session. It was down about 1.5%. I see a scope that the stock might open up in the green because there's not a major disappointment that has come in on Infosys as well. Yes, there's a constant currency decline of 1%, but that's pretty much an expected line. The margin has been maintained at 20.5% broadly in the sense of what we were expecting as well. And the bottom line, yes, it's a 30 crore miss, but that's par for the course. The only more important thing to watch out for will be the management commentary, because leadership exits at Infosys have been a bit worrying factor, and the fact that North America continues to show decline. So despite those commentary coming in from the Fed members, which caused a bit of a turnaround in stock prices, it probably hasn't caused a turnaround in client decisions as of now, and we are not seeing that amount of a deal pipeline building up. So that's something we'll have to watch out for. Not much to go by as far as Infosys is concerned. The guidance cut is something which is pretty much an expected line. So I'm not expecting a big move either way for Infosys. TCS might open up firmly in the green.
All right then, thank you so much Anisha for summing it up for our viewers that how these earnings have panned out, because IT has been a bit of an underperformer, and in the last 10 quarterly earnings we have seen TCS declining 8 times and Infosys falling 5 times in the last 10 quarterly earnings. So this time, on the back of a little better than expected numbers for TCS and inline set for Infosys, let's see how the stock reacts tomorrow. But with this, viewers, it's time to wrap this edition of the result coverage. It's a goodbye from me and Winnie and the entire team who put the show together. Thanks so much for watching.